Is now the right time to buy? We're talking to our local real estate expert, Louie Ortiz, when we come back.
Well, if you do remember, at the end of last year, we saw that the home prices in San Diego County appeared to be a little bit better than some of the other neighborhoods in Southern California. Come January, though, things started to take a twist and move slightly backwards.
Yeah, Louie Ortiz is here this morning, our real estate expert, to kind of get us centered here and find out where we are going into this new year. What do you think?
Well, good morning. Well, we've seen a little bit. The January numbers just came out recently, and we saw a little bit of a decline in January in the median home price here in San Diego County. Another interesting statistic was we also saw a decrease in the number of sales compared to last year for January.
Now, when you take sales into account here, you're talking foreclosure sales, and folks that are still selling their home that still have possession of their home.
Yeah, absolutely. All sales in total was about a 3.2% decline year over year. There were a couple of other really interesting statistics coming out also just recently in the numbers. One of the interesting things was about 25% of the homes that were being sold in Southern California were absentee homeowners. In other words, these were people buying second homes or maybe investors, and that made up a big part of the market. You know,
one of the problems a lot of people talk about is they just simply can't get funding to buy the house. Are we seeing that change at all, or does that seem to be status quo as we move into 2011 now?
I think it's the same. It is definitely more difficult for buyers to get funding depending on their credit and such. It's definitely a more challenging market for people to get loans.
You know, speaking of loans, I just tell you about my personal experience with my bank. I had one of those variable loans that has since I've started paying principal on it. It's about 6 years old now, so it's adjusted twice. And it's gone down to 3%.
Yeah.
But I'm looking at it in the future thinking, okay, you know interest rates are going to go back up. So I call the bank and I say, pick a number, any number, you tell me what it is, and lock in my interest rate. Do you think they even want to talk about that?
Well, what I'm saying...
They don't even talk about it. They say, nope. You're making your payments. Why should we lock in a rate right now?
Yeah, that's exactly the case. In fact, most of the banks were overwhelmed with some of the foreclosures that were going on and people that were delinquent. And typically the lenders were only trying to do loan modifications or short sales for people that were really, truly in trouble. Those lenders or those borrowers that were current on their loans, they were not really talking to or working that out.
So you try to project into the future, though, and say, I'd like to avoid a problem.
Yeah.
5.5, maybe I could afford going forward, but if it should keep adjusting upward, get up to 6, 7, 8, I'd lose my house. They say, well, too bad. We'll talk about that when we get there.
Yeah. You know, another thing that's a little bit troublesome to me is I see interest rates ticking up just a little bit right now. We're close to maybe just under 5%. It's scary to think what might happen if rates do go up. A lot of people have adjustable rate loans and they've gone down, but when they go up, we may even see an increase in foreclosures.
And folks cannot refinance from those adjustables because they don't have enough equity in the home.
Yes.
They don't have any cash. They may, in fact, be upside down.
Yes.
Do you see any solution for this point other than letting those homes go into a distressed situation and just continuing the crisis?
I think the only way, in my personal opinion, to resolve the housing issue is just to get through some of that inventory. There's homes out there that people just can't afford. There's other ones that are going to foreclosure, short sales. We just need to get through all that inventory before we really see what I would call a more traditional market.
A lot of people say that at some point the housing market will be flooded with these foreclosures and short sales, but we really haven't seen that happen. Then there's the other side that say that the banks are not going to flood the market because they're the ones who essentially take the hit when that happens. Are you seeing anything as far as a flood of these coming on the market, or do you think the banks will trickle them out?
You know, it's interesting that you bring that up because towards the end of last year, as the real estate community was getting prepared, because we heard a lot of rumors that, you know, we're going to have all this shadow inventory coming back on the market and such, and we actually expected a lot of that now in the first quarter. I personally haven't seen a whole lot of it, although I have seen some of it come on the market. And one of the interesting things is that when it does come on the market and those properties sell, it does affect the equity sellers because suddenly there's a home that sells that's a comparable, and then homes aren't appraising. A buyer and seller agree on a price in a traditional equity sale, and because there was a short sale or a foreclosure in a community, that property doesn't appraise of what the buyer and seller agreed upon.
And it depreciates the market.
It does.
And it brings the market down even further, which you'd think that somebody along the line would take that into account. Because as this inventory continues to come out, it's just going to depress the market further.
Right.
So, I mean, you say we got to get through the inventory. Well, I mean, we might all be in trouble again down the road when that happens, when we get through the inventory, which just continues the cycle downward.
Yeah. Well, there is some positive news. I mean, we are seeing more stability in the bottom part of the market. We're seeing a lot of those homes being sold. On the high side, I still am seeing price declines around the county, and my personal opinion is we're still going to see a bit of declines for a while. There was an interesting article that came out maybe a few months ago in Moody's, and a really interesting thing about San Diego County is that Moody's was predicting that our prices would not rise to 2005 levels until 2023. And so if that's true, I talked to a lot of sellers in our market here, and they say, oh, we're going to wait till the market comes back, and they're expecting to see the prices like they did in 2005. And if Moody's is correct, it could be 2023 before we see those prices again.
Louie Ortiz, we certainly appreciate your expertise on this, and I know this is a topic that we could spend several minutes talking about. We do appreciate you coming on and just giving us kind of a hint of what to expect for this
Good
year.
to see you.
Yeah, good to see you both.
All right.
Thanks.
Thanks, Lee.